All right, good morning. It is Wednesday, September 20th, and I've gotten from me Decred. I'm going to tell you the truth, I don't know if it's Decred or Decred. I don't know, but this is a coin that's getting some traction, and I've had a few people reach out to me in the last 12 hours encouraging me to take a look at this coin that it was going to get some traction today. And lo and behold, it's popping pretty nicely. Now, I don't know the nuances of what they're doing, but if there is some sort of good news event, well, how can we, how can we analyze it, approach it? Is there a trade for us? Is there opportunity here? And we don't need to know the nuances of what they're doing technically, but is there a trade that we can set up and take advantage of the fact that there's volume and volatility in the currency. Okay, so one thing we could do is just go to their Twitter page, right? And so here's the news, and this is a really interesting cryptocurrency, and it'd be well worth maybe spending a little bit of time getting over to their website and getting a sense of what they're all about. And it's timely in the context of centralized exchanges running into issue with government. Obviously, China is the most recent example, but this is an interesting concept, and this is the news event. Now, I cannot tell you what this means. That there is a cross-chain atomic swap with Decred and Litecoin. Don't understand it. Don't need to understand it. I just know that the market likes it, and it sounds like it's fairly cool. So let's just go through the same process. So let's go over to CoinGecko and see how it ranks. Well, we can see that there's definitely, good ranking here on their metric ranking system. We're over 50, which is what I like to see. We can see here's this news event. Here's the Google trend. So it's been in the news. Here's the chart. We can see there's been this pop, and it's starting to move, and they're certainly very active amongst the technical community. So let's take a look at it. Let's go over to TradingView and see how it's been performing. Well, I mean, here against the dollar, I mean, again, it's year to date, it's 4,000%. It's just these numbers are so big. It's almost hard to quantify this in any relative context. What do you compare that to in this period of time? There's not much you can compare that to. 65% in the last 6 months against the dollar. It makes me want to look at it. Okay, so and against Bitcoin. So I've got here the dollar and Bitcoin. Last 6 months it's been down against Bitcoin, remains higher against the dollar. Well, let's go look at it against both. Let's see if we can come up with anything. So here it is against the dollar. All right, so a little bit of a mess. Nothing real clear here. Let me open it up a little bit more. I'm on a 240. This is against the dollar on Bittrex. So I can see the last thing that's clear here. Well, we had certainly some sort of 1, 2, 3, 4, 5, and then you can probably carve out a clean 5 in that 5 of 5. Then we get the ABC correction. Now this I mean, yeah. Could I put a count on that? Sure. Do I need to? No. I don't really care what that is. Some sort of complex correction. I know we stay internal to the first fifth. We get a clear. We can get a. This could be a failed fifth right here. So we get an A, we get a B, and we get a C. Okay. So clearly corrective action as we break this down. And that does look like there's a 1, 2, 3, 4, and we fail on the 5 by a few dollars. Corrective activity. Now, following the correction, we're looking for impulsive behavior. Well, today we are certainly seeing that. So if we were trying to trade this, well, you're late to the party now. But if we're just going to, basic analysis of how we would always start, we would look at that and say, well, If this is our impulsive 1, this is a very shallow 2. Does it happen between the 38 and the 50? Absolutely. We prefer it down here between the 50 and the 618, but this is certainly valid. Certainly valid. We've got the impulse, we've got confusion, uncertainty. We get, perhaps it's the news event now that triggers the next leg higher. So if you knew that was coming, or you were watching this, or for whatever reason, I would probably have been left out of that trade because I'd been looking for it at the 50. Right, I've been looking for, we came down here, look at this, the A wave here, potentially you had some support there. So I'd have likely missed that trade, but here we're off to the races now. So anyone who caught it, we got to the 50 period, and somebody caught it. I can tell you that somebody caught it. So off we go up to the negative 23. We've gotten through it. Now we're wrestling with that again. So if knowing there's going to be resistance coming back the other direction, how are we doing? Well, we're through the 65. So that looks encouraging. So, is there a trade for us? Well, not at the moment. Not at the moment. Even if I take this down to a 1 hour. Okay, well, if this is this is the ugly part of it here. This is very unusual looking action for a second wave. Complexity in the second wave is unusual. Not it doesn't disqualify the trade, but that's unusual activity in a second wave. So, let's just assume that that's what we've got here. So we've got some sort of impulsive wave underway here, and you reduce some of the clutter. You could certainly make the case that on the smaller term, if you were on this early today, well, you've got a nice little trade underway. Went down to the 618. We right, just basic support and resistance here. This prior resistance here provided some support. We don't get through it. The 618 holds it by a dollar or two, and then off we go. So if this is legitimately going to be an impulsive structure here, well, you could probably make a case that there's some sort of 1, 2, there's the 3, but we need to see the market get higher. We need to get this higher so that we can quantify it and then set ourselves up to trade it. So, we know that the first wave and the third wave, there's got to be some relationship here. And at the very least, if it's going to be a third wave, it's got to get to 100% of the first wave. So we've got some more upside here before we can quantify this as a third wave, as an impulsive move here. So that this is the benefit of Elliott, is that it gives you a rule set with which to analyze the market and determine what you've got. And it's that structure that is its real advantage, so that there's not confusion about what's happening. Okay, so if this is a third wave, if we're going to identify it as such, then here's our 1. This is some sort of ugly 2. And we're going up. We need to at least get here. We're going to come back. And that's what bulls now are hoping to see. Okay, got to at least get up there. So if we do get up there, then we can quantify this as potentially a third wave. We know that it could go much higher here. This could be just the start, because we know that third waves most commonly get up to 162% of the first wave. But as a minimum requirement, we got to get here to 39, 40-ish. If that's the case, if we get there and we start to retrace, then and only then, in my view, if you will, is there a trade for us? So we've got to look at that and say, okay, well, if this is breaking out and we're going to get at least to here, I got to wait. I got to wait till we get up there. It proves itself as impulsive, and then we take the first retracement. Remember, we're looking for 2s and 4s. If we can identify what we believe to be a 1, 2, 3 impulsive structure, we're looking for that next retracement. Right, we'd look for it at between the 38 and the 50. That's the most common for a wave 4. So at the moment, unless you caught this retracement here, you're on the sidelines. It's not there yet. There's no. Could you buy it? Sure, yeah, you could buy it. Could you buy it? Maybe it gets there. Maybe you make some money. But I wouldn't buy that because it doesn't fit my my trading plan, my rule set. There's not a quantifiable pattern here where I can say, okay, I'm in. I know where I'm wrong. This is a risk reward scenario that I'm comfortable with. I'm in the trade. Here, I like what I see, but I'm on the sidelines. I'm going to wait, but it's certainly one that I'm going to mark. I would likely, put an alert on it here. So I want to know if and when we get to the 100%, and if we get there, then I'm tracking the retracement. Okay, there it is against the dollar. Let's go look at it against Bitcoin. So it's a little trickier here from the Elliott perspective to quantify this. So, just in big broad strokes, well, we can certainly say that there was some sort of A, B, and then some sort of a C down here, right? So if that's the case, well, can we carve out 5 there? Well, yeah, that looks pretty clear. So we can get a 1, 2, there's a 3, 4, 5. Put that in a different color. So there it is. Now, take note. First thing that you want to look at is, does the 4 overlap the 1? Okay, does that work? Well, so there we have the ending diagonal, right? Can only happen in a fifth or a C wave, or the fifth of a fifth, right, within the fractal nature, right? So it's got to be a fifth wave. So here's our C wave. So does that fit? Yeah, that works. That works. And there's good proportion to it. So, see, here's where it's a little trickier here over here. So if that's the case, then as I'm coming back the other direction, let me give this a different color. If I'm coming back the other direction, well, then do I have 1, 2, 3, 4? Maybe that we'd have some sort of a megaphone kind of a thing happening here. We'd have to, look here. This is not an uncommon pattern. So we get a megaphone kind of. So this, right, take note here. We overlap the 1 pretty severely. So this could only be a first wave, a leading diagonal, which would project this up here. Well, is that in the realm of possibility? Let's see if we just carve out the whole thing. Well, yeah, that's kind of interesting. So we're going to need a big fifth here. We're going to need a big move, but valid, yeah. Or it's not as clean to call this the 1, but it's possible. Right now, that's how I would label that, and say, okay, so we're going to get a megaphone leading diagonal. We've got this bullish news. Here's the first target for this. That we're on an 8 hour. Let's take it down to let's go down to a 2. All right, so there is a case to be made for if the Elliott wave just if it doesn't appeal to you intellectually, or you just find it too complicated to make sense and too many variables. If you just don't like it, there is always the the heck with the Elliott count. Let's just grip it and rip it. Kind of, let's just trade the fibs, right? Because you could make this case here and say, I don't care. All I see is an Elliott count, or pardon me, I see a fib retracement. Okay, so there's my 50. Boom, I hit my negative 23. In and out. Money's been made. Now, it's popping as we speak here. Let's go down to the 30-minute. Okay, so I made money once already. Taking the 50, we got up to the negative 23. Do I get a second shot at it? I sure do. Between my 50 and the 618 holds it. Where's my next target? Right up here, which would be the 618 of that larger retracement target here that we've hit, because we've got the 23 off the large one. Here's the next one. So you don't have to get caught up. You don't have to get caught up in the Elliott context. It's there. It's useful. It's a tool, but don't let it prevent you from getting into the market if you see something like we had here, where hey, there was a little news event, a little chatter on Twitter. People were saying this is going to pop, likely to pump. I don't like that phrase because it implies manipulation. What I see is good news came to this currency and people bought it. So where are they going to buy it? Where's it likely to go? For traders, shit, this thing could go much, much higher. We go out to a daily, this thing could be, $100. But right now, as traders, we're trying to get these swings. It's not a home run ball every time we step up to the plate. You had two nice trades here. Two nice trades. Simple fib retracements. All right, don't let the Elliott concept keep you out of the market, overcomplicate what you're seeing and what you're doing. You can get caught in the paralysis of analysis. Right? If you see something that you like, you get a good pull on the retracement. You can be in with a small amount of risk. Take the trade. Take the trade. Right? Certainly a valid approach. Okay, guys, I'll wrap it there. Back with more later.